Welcome everyone to today's daily macro update for Wednesday, October 15th. Taking a look at some of the macro data here, still we're on day, I think it's 11 of the trading days where the government is still shut down. And so not getting any public data, but still getting some private data. As we can see here, the Empire State Manufacturing Index, which is one of the largest manufacturing indices in an early market indicator, did have a positive acceleration. If we take a look at this, this is probably the second largest acceleration since November of 2024, which is a good sign. Going back and looking at this, it's not accelerating at a huge pace, but still has a positive rate of change, which is a good sign here. But also as well, when taking a look at if we break this up between new orders and prices, you're still at a point where you have high input prices and very low new orders. So, despite the acceleration there, you're still seeing, some constraint with the manufacturing sector, although when you go back in time, that's typically the case where prices are much higher than the actual new orders rate. In any case, as well, we were supposed to get some inflation data. Let me see if that actually came through here. Okay, actually, no. Hold on one second. All right, yeah, so that wasn't able to update. Typically, we get the sticky price consumer index by the Atlanta Fed. That didn't come out today, I think, because it was relying on some government data. But still, one of the leading indicators that we can take a look at is called the Truck Tonnage Index, as well as the Freight Transportation Service Index. But truck tonnage, it's one of those things that you have to look at. And, it has had a large drop off over the last couple of years, and it's actually been improving steadily, even though it still remains low. So, I mean, these are all indicators that the economy, the real economy, is kind of just pushing sideways at this point. It's not necessarily falling, but it's not necessarily rising. It's kind of just remaining stagnant. While at the same time, we actually are still, or we're starting to get indicators that inflation is coming down. And so, at least not accelerating, right? And so when we take a look at the Cleveland Fed's inflation nowcast, you can see that this has come down a little bit, even though it still has headline CPI remaining at 3.0% for the next 2 months. You're seeing core PCE come down just slightly, right? So that's the Fed's preferred inflation gauge. Definitely something to keep track of there. So in taking a look at the charts here, and for the title of this video, there's a silent recession that is going on right now. And even though the nominal prices of the S&P 500 and other risk assets are making new all-time highs, what's interesting is that if you take a look at the S&P 500 denominated in real terms with a real currency, a hard currency like gold, you can see that actually the S&P 500 is in a huge bear market right now. So all of the value that's being contributed towards the S&P is solely due to the dollar being devalued at a faster rate, right? And when you look at the S&P 500 denominated in a currency that keeps up with inflation, I mean, you can see that it's in a clear bear market. Looking back all the way through the pandemic, you saw a large explosion, which is why, you had that huge bull market from 2020 to 2021. And then you had the bear market of 2022. And, even though the market in nominal terms has been making new all-time highs, it kind of has just been pushing sideways. You did have a decent run up from May of 2023 till about February of 2024. And then really ever since then, it's been in this choppiness. And so all that to say is that the real bull market is not in equity markets. The real bull market is in precious metals, gold, silver, platinum, palladium, those things that are actually, hard assets, that's actually what's out competing the entire market currently. And so, yeah, I mean, for me, when looking at a chart like this, why would I hold equities when I can just hold something like gold that's also less volatile and be able to outcompete it? And then there's also some platforms where you'll actually get a return by depositing your gold. So not only are you getting the price appreciation, but also too, you're getting paid in gold, uh, with the APY that they are giving back to you there. So yeah, what we're seeing here is just a dollar devaluation that is pretty historic, and we really haven't seen a decline like this since the pandemic, right? So yeah, in real terms, there's 100% a recession going on, and the illusion of the AI boom is kind of just covering this up, while at the same time, the coordination between the central banks and the government for their, easy monetary and fiscal policy that's going on right now, that is masking a lot of this silent recession that's currently happening. And so the main takeaway is that if you are scared of investing your money, you should be more scared of your purchasing power clearly being in crash mode right now. And so you have an obligation to take your dollars and put them in hard assets so that they don't experience this devaluation. And so that's why over the past few years, my team and I have just been hyper focused on buying gold and holding it, because that's really the only thing that's been able to preserve your purchasing power, as well as Bitcoin too. But gold is definitely something that is out competing it, right? If you look at a chart of let me see if I can find it here, or I can just do gold divided by Bitcoin, and we can get a decent look at this. Yeah, so pretty much since August, gold has actually been a better investment. When looking back, though, actually, let me see if I can find a better ratio here. We'll just do Bitcoin and then divide it by gold. There we go. That's a better chart. Yeah, so Bitcoin did outcompete gold from about the middle of April of this year up until it peaked in the middle of August. So it had basically a 4-month run where Bitcoin was a better investment than gold. But ever since August 14th of this year, gold has been the better contributor. So at this point, if all you did was own gold and Bitcoin in your portfolio and you wanted to adjust it based off of the exposure, which one's bullish and which one's bearish, from April to August, you might want to lean more, or you should have been leaning more heavy into Bitcoin. And then now you should be leaning more heavy into gold, right? That's essentially what this chart is showing you. If gold and Bitcoin are the two things that you want to own the most because you have an incredible distrust for the government, rightfully so, I'm right there with you. But gold is the best performing asset currently right now, no questions. And then of that, if you want to look at silver versus gold, silver has actually been outcompeting gold as of recently. So let's just go to that real quick. So silver denominated in gold, ever since August, that's actually continued to go up. So yeah, silver has actually been outcompeting gold, but obviously silver has a much higher volatility profile. And so you are taking on some added risk if you were to go heavyweight on silver versus gold. But, if you take a look at silver versus Bitcoin, I think this is a much better chart, actually. Oops. Yeah, so silver versus Bitcoin is having an enormous breakout. Really, silver has been getting smashed by Bitcoin pretty much since January of 2023. And then it had a little bit of a run up here from March of 2024 till about October of 2024. And then the entire year of 2025, it's been pretty much a loser. But silver is finally having a breakout versus Bitcoin. And so, yeah, silver and gold, two of the biggest allocations in my portfolio currently. And then I have some sprinkled in there, some equities and things like that. So, all right, with that, we'll go ahead. There's 2 minutes left in the markets right now. We can go ahead and answer some questions here. Would you consider this a commodity super cycle? If yes, doesn't it lead in an eventual increase in oil prices? No, I would not consider this a commodity super cycle. I would probably consider this a precious metals super cycle, but commodities aren't precious metals, right? In fact, if we take a look at, let's take a look at the commodity index that my team prefers to use in terms of an ETF here, GSG. You can see that pretty much the commodity index has kind of been going downward to sideways, or it has had a nice little run up here, but this is not a super cycle in commodities, right? It's pretty much just been pushing sideways. So yeah, I would not say that this is a commodities super cycle. If you do look where it's at, since the pandemic though, you've had a huge acceleration in something like GSG, but yeah, no, this is not a commodities super cycle. This is a precious metals, base metals, and industrial metals super cycle. That's for sure. I mean, if you just want access to a precious metals fund instead of just owning gold and silver and some of these others outright, I would highly recommend taking a look at the ETF DBP. This is the Invesco Precious Metals Fund, and you can gain access to that there if you don't want to, trade gold and silver actively. So you can use that one. The miners too have been absolutely crushing it. Thoughts on Robinhood and Nvidia? Both are bullish trend. Thoughts on HUT? Further highs? Possibly. It's been on a rampage along with some other, Bitcoin miner stocks. Could be going higher. All that matters to me is that it's bullish trend, and whenever it has a dip to the low end of the trading range, I'm buying it. I don't care about the time frame. I don't care about the price. For whatever reason, this could go up to, I don't know, let's say it goes up to $200 from here. Do I really care? Well, yeah, I mean, I want to make money, but I care more that I'm exposed to something like this as it makes those higher highs. And so you have to get out of your mind right now price predictions, time frame predictions, all that is just a load of crap because nobody has a crystal ball. And so what you want to do is you just want to ride the wave, right? Think about a surfer. They don't know how big the wave is or when it's going to come, but when they see it, they are going to ride the wave for as long as they possibly can. And that's what you want to think about when it comes to the markets. Good questions, though. Let's take a look at some of the comments on Instagram here. Let's see if there's any good ones. Buying gold right now feels like buying gold at the top. Hey, Kuval_R. Used a verb right there. Feels. It feels. Stop using feelings. Get the word feel out of your investing vocabulary right now from this point moving forward. Never say the word feels again. If you do, I'm going to be sad. The goal of investing is not to try and time tops and bottoms. It's to have exposure when there's bullish trends and not have exposure when they are in bearish trend. Now, to your point, would I be buying right here? No. Gold doing something like this, I was actually selling a little bit more today as it makes its new all-time highs. But when do you buy? You buy when it has a red day. But this right here, gold doing this is a huge macro signal. This is a huge flight to safety. And who's doing the majority of the buying here, by the way, on gold? It's not people like you and me. This is actually coming from central banks across the entire world. So if central banks are hoarding gold right now and they are fleeing to this thing, what does that tell you? The next 10 years is going to be insane in terms of, what's going to happen with fiat currency. We are in a time where there's going to be a lot of change. That's for sure. There's no doubt about that. But anytime gold has like these red days, those have been the time to buy. It hasn't. Whenever you see something go parabolic like this and it's in a crazy trend, anytime there's a red day, hit that buy button. Not financial advice. That's just what I'm personally doing. Logan says, with your reasoning of why the S&P continues to increase, what does that mean for mortgage rates in the short/long term? What that could mean is that mortgage rates could continue to be elevated. Don't pay attention to really. I mean, it is helpful to know what the Fed is doing, but in terms of like mortgage rates, credit card interest rates, the things that you and I pay for, look and pay attention to what the 10-year bond yield is doing. And yes, the 10-year has been coming down and it currently still remains in a bearish trend. But if you zoom out on the 10-year bond yields, you can see that, it's pretty much remained, where it's at over the past, 5 years, or I'm sorry, 3 years. And so unless the 10-year bond yield does something like this, which if that happens, then that means we're in a full-blown recession and we're probably going to be worrying about other things than mortgage rates. But if that happens, that'll definitely get mortgage rates down. But, if this just continues going like this or sideways or whatever, even if it's slightly down to the low end of this range, I wouldn't expect mortgage rates to get below 5% from here on out. So if you find a good real estate deal and you're able to justify and being able to, if it's something like a rental property or whatever, if the numbers make sense, then I don't think waiting around for a slightly better mortgage rate is going to be where the advantage lies on a lot of these real estate deals. If you're someone who's just looking for, a home to buy or, residential property, first time home buyer, I wouldn't be trying to just hold your breath with waiting for rates to have a meaningfully lower decline. Because I just don't see mortgage rates coming down further than 5%, unless we have a full-blown recession. The 30-year fixed mortgage rate at the timing of this video is 6.3%. So if it got down to 5%, then that would mean that we were in a pretty bad recession. So they could be coming down. We'll see. It is in bullish or bearish trend, but hopefully that answers your question there. Let's go over to TikTok here and see what people on TikTok have to say. Should I sell my gold, bro? I'm up 100%. The best time statistically to sell a little bit and take some profits is at all-time highs. So according to our process, yes, I was selling a little bit. There's no harm in taking a little bit of a profit there and buying lower once you have a little bit of a dip. But Yeah. Good questions. Good questions. But all right, with that, I do have to head into my next meeting here. Right now, we are doing a promotion from now to the end of the year, which is our Macro Mastery 6-week challenge, where you get full access to our partnership circle. And we give you an outline for you to complete these tasks for 6 weeks. And, you learn our process, you learn all of the macro knowledge. You're fully involved with which assets we're looking at. You have full access to our partnership circle. And then, if you complete the 6-week challenge, you get a reward. And it's really just a great way for you to start to get more familiar with macro in this post-pandemic age. And I highly recommend that you guys take advantage of it. Just go to the link down below and book a time with me, and we can go over the details and see if it's something that you want to take on the challenge there. But I appreciate everyone for joining here, and we will catch you in tomorrow's daily macro update. Bye, everyone.